I think it's hard to actually pick just one, so maybe I'll talk fast and try and fit a couple in. I think firstly, one of the major shifts for me has been the move to thinking about impact management in a much more dynamic and forward-looking way, and really looking at impact measurement as something that helps you manage impact better rather than report what you already did or align what you're doing with with metrics. So I think that's been a really big shift, which is good to see. I think the development of the shared norms out of the impact management project's been, had an amazing impact. The 5 dimensions of impact and the ABC impact classifications. I think the industry's really and investors have really, rallied around that as a way to actually communicate and come together around thinking about impact, which is really good. I think one of the other aspects is the benefits of network effects and the development of the Global Steering Group for Impact Investment and the network of national advisory boards. That's really given a central locus of focus for people who are passionate about impact to come together and really try and drive change collectively and share learnings and really support each other. And one of the things I love about this sector is just how generous people are, with their time, with their IP, because they really see this as being a movement towards actually driving change and contributing to change, which is really positive. And the other network, effect, I think, has really been an offshoot out of the impact management project in terms of the structured network becoming the impact management platform and providing that forum again for a lot of the standard setters in the sustainability and impact space to come together, share knowledge, work together, drive convergence. I think that's been really, really positive. And then I think the other more macro shift has been the shift in thinking about impact investing in a very transactional sense around impact investments, to starting to think about things in a much more holistic and systematic way around creating impact economies, which I think is really important in terms of that shift from thinking about impact investing as a niche sector to how we actually pull this into the mainstream and embed impact in the way all investments are made. Yeah, I think one of the shifts that still has some potential to play out and have a bigger impact is that shift at the strategic level, so the portfolio level, really thinking about where capital's needed most and where we want to play, and then really thinking about the investments that help to actually drive the change we want to see. So, I think that there's still a tendency to think about investments first from the financial return and then justify the impact, rather than really thinking about what are the challenges we face, what are the opportunities we have to create positive impact. And even if it doesn't look like there's a commercial return opportunity, actually working with actors across the system to create the financing structure and drive capital to where it's needed most and where it can have the most impact. It's interesting, I was watching the Beyond Zero movie about the interface story today, and there was one excerpt where the CEO was trying to get an investment for a solar farm through the CFO, and the CFO said, this doesn't have a return profile in 99 years. Anyhow, the CEO convinced the CFO to sign off on it, and they built this solar farm, and the state of California basically put in a huge order that paid for the investment in the solar farm basically in one transaction. So, sometimes I think we really need to see that shift in terms of preferences and market expectations around moving towards sustainability and seeing the opportunity and taking that leap of faith, which I know is a big leap of faith for investors. I think one of the other aspects is taking a much more portfolio-wide and holistic approach. I think that we still tend to think about impact in terms of niche impact funds, rather than how we can actually apply that across the whole portfolio, and also how we think about impacts more holistically, not just positive intended impacts, but really exploring that the interdependencies and the potential trade-offs and synergies as well. So if you're looking at a decarbonisation fund, it's really important to look at a lot of the social factors and accessible energy and other things that can really help drive not only the impact but also the investment performance in the long term. If we're not dealing with social dislocation factors out of energy transition, then that's going to put investments at risk as well as the impact. The other couple of things I think are around the capacity building impact management capacity, not only at the investor level, but how we build that at the investee level, because really they're the companies that investors are investing in are the ones driving the impact. And I think that more of the focus around metrics should focus on building the impact management maturity and seeing that change over time than necessarily thinking about lots of performance metrics that may or may not be so material. And what we really want are companies that can really be agile and be making those impact informed decisions in a very dynamic context. And then finally, and I touched on this earlier, just around thinking about things more holistically and working collaboratively with a different range of partners, so that you come at the investment opportunity in terms of looking at the big challenges and the problems and the missions we need to solve for, and how investment can actually make that happen, rather than actually looking for the investment opportunities that make sense today within the existing envelope. We really need to actually expand the boundaries of what's possible. Yeah, I think what I'm really passionate about from in the impact investing space is the opportunity for impact investment to be a catalyst for broad system change. And I really enjoy that challenge in terms of actually trying to sort of see a path through to shifting the existing paradigms and systems in place to create a financial system that is actually fit for purpose into the future. And that has to be sustainable, and it has to be contributing to net positive impact. So that's where my passion for this sector really lies. And I think that there's a huge amount of opportunity for impact investing to be the innovation sandpit that's really looking at things differently, challenging the status quo, coming up with solutions, and then catalysing those into mainstream approaches for investment. I think that for me, that the role I have at the moment with UNDP, particularly around the more primary role I've had in leading the development of the SDG Impact standards, I think that's I'm extremely grateful for that opportunity. It feels to me like the capstone of my career and brings a lot of the things that have been, a passion for me and things that I've really wanted to be more involved in through my career, and feel like a lot of paths have been leading me to this point. So, I feel very grateful that I have the opportunity to do that work and to do it within the UN system, where I'm actually able to be building things that are effectively in the public good space, which is really, really pleasing. In terms of challenges, I think the challenge is that change is hard. And so sometimes it can be, a little bit discouraging when you sort of realise the gravitational pull back to the status quo of, strong systems is just so strong, and it can feel a bit exhausting. But then I think when you step back and sort of look at, how far we've come, there is hope. And I have, I do have a lot of faith that we have the capacity and the ability to actually change the course of direction and use capital and create a system where capital is a force for good, and we can take steps that actually help us protect this beautiful planet and create a better future for everyone. So